Good morning, everyone. Welcome to the On Time, On Target Morning Brief for Invest Fighter for Precision on a daily basis. Welcome to a Monday morning here on August 9th. Today, we're going to talk about Coinbase. If you remember, Coinbase is the company where you can go to buy all your crypto. There are several companies out there, but it's really the major company, if you will, to go out there to buy and hold not only the mainstream cryptos, but as a ton of other cryptos as well. It seems like they're popping up everywhere, right? But Coinbase, if you remember, did their direct listing / IPO about 4 months ago, and the thing bombed, right? It opened up at $380 a share. It did nothing but drop, lose, all the way down to, I believe, below 300. We'll pull the chart and take a look at it. But basically, it fell, and then it kind of flatlined for a couple months. And now as we head into the fourth month of the stock trading openly, it's actually started to trend up a little bit. So we're going to take a look at that, and I'll give you my best take on whether it is investable yet. Is the bottom in? What sort of upside do we have out there? We'll talk about that when we look at the chart. You do know probably that crypto has been on fire. We had the B Word conference not that long ago, or Cathie Wood, Jack Dorsey, Elon Musk, and several other very smart people in the crypto space really came out in favor of crypto and talked about all of the different upside. You know, I'm a fan of MSTR and ETHE as my proxy plays, if you will, instead of holding crypto outright. But those have both been on fire. Some of our longs this morning, MARA and Riot Blockchain, are all crypto related, and you'll see how much they popped over the weekend. But basically, those were kind of must, if you believe the crypto thesis, if you will. You're going to want to hold one or both of these going forward from here. All right, for our question today, we're going to talk about bond ladders. A little bit boring, but we'll kind of review as to how you want to set this up. So think of yourself now in retirement. You're financially independent, and now you have these bonds, how you want to structure that. For our trading stuff today, we have a couple of them. I don't really like NM. I'll tell you that ahead of time. We have OEG, which I like the storyline, but it's a low price point. It's down at $3.47. We have VTRS long with a good story, and we have HRTX short. If you're catching us on replay, thank you so much for checking us out. Make sure you subscribe, hit the notifications bell. If you want to join us in the room, what you don't see is a Q&A window and a chat window where folks can ask me questions real time. And with that, let's go ahead and get started. All right, welcome back, everyone. Here's the lineup card for today, August 9th. Standard disclaimer applies. This is a financial education presentation. You have to do your own due diligence before acting upon anything you hear this morning. Full disclaimer information is available at OTOTnow.com. Mission objectives, as always, grow our money, protect our money, and living off our money. Specifically today, we're talking about growing our money through how do we gain exposure to the crypto space, right? Well, when you think of how would you gain exposure to a stock market, you could either buy the stocks, or you could buy the custodian out there. So this is really analyzing that situation for the crypto space. If you're sitting there thinking, well, I don't really want the volatility of holding a crypto, so why don't I buy the exchange that people buy and sell the crypto on? So pretty smart thesis out there. However, there are some problems specifically with coin. The pros are kind of the major player in the space. They do charge a high fee, which is good for when you're a shareholder because they make more money that way. And then the con is they charge a high fee, right? So Apple commands a high fee because they produce basically the best stuff out there across the board in whatever space they're in. So people are not only paying their high fee, their their margins, if you will, but they're also anxious and standing in line to do so. So that's really what you're looking for as an investment. For Coinbase, it's a little bit different from, it's an exchange. So it's something you're logging online to. There's no real product, if you will. It is a pure service. But the issue with the high fee in the service industry is one of the reasons I went into this business, because the fees were too high. I knew I could beat the fee, is people will leave if they can get a better fee elsewhere, right? For, you could argue whether that's a commodity or not. I think the buying and selling of crypto is a commodity. You're simply just looking to do it as efficiently as possible. So why pay the Coinbase 2% fee per transaction if you could find it cheaper elsewhere, right? You just need to find it. So the issue there is once people do find it, they could leave in droves, right? So that's that's kind of where we're at. We'll take a look at the chart here in a few minutes. All right. We're talking about the question of the day. Our flow, long, short, open, short, long. We'll do a mark review, headline review, come back, look at coin, and then we'll get in our short-term execution stuff. Contingencies and academic resources are standard. Let's go over to TD Ameritrade and check out where we are in the market. I'm going to zoom out here first to where we are in the long-term market just continues higher. And people ask me every day, hey, what's your thesis for the end of the year? And it's like, well, it's the same thesis we had for the entirety of 2021. Get stimulus approved back in the first quarter. Check, we did that. Defeat the coronavirus. Yep, check, we did that. Okay, maybe we're unchecking that box to a certain extent, but certainly it was beat there for a while, right, as we opened back up. Infrastructure bill, still kind of dorking around with that, so kicking that around, and then all those were going to be positives for the year, which they have been up nicely, I think, into the low teens, if you will, on the year. And then the real issue is taxation reform and what's coming down the pipe. So when you look at this chart, all is well. It won't necessarily be all is well forever. So, don't get spoiled, but should be certainly happy that we're kind of bouncing off of new highs. All right. When you look at the 5-day chart, you can hear, we had some congestion, and then really Tuesday through Friday last week just kind of powered higher. All right. Setting up for our day trading stuff. Again, you're going to have 4 screens. OEG is the long here that we're taking a look at. It's dropped significantly, so we'll see where it's opened. And again, the low price point is tough to hop in here and grab. And they're opening up they have a big new contract. We're opening a solar farm is why this is on the move. VTRS also long, and then we have HRTX short. We'll get into those theses in a second once we get back to the trading screen. All right, let's go over to CNBC.com and take a look at those futures. Largely mixed and largely light for a Monday morning. So, straddling the open here. Nothing really going on, if you will. Let's check around the world. Pretty light in Europe, light and mixed. Asia, green across the board. That's nice. Up 1% in China. All right, in the bond world, 1.28. Nothing really to report there. Oil, again, continues to kind of sell off and settle back towards that 40 to 60 range, which is good and healthy. Gold, silver, copper, all selling off. And then crypto, you see the big bump up in crypto, almost 5% across the board. So you just can't ignore that. So if you remember when we started talking about crypto in earnest, when it fell below 30,000, that was that's weeks ago. I don't know exactly offhand. I would say like 4 or 5, 50% move up from that, from the 30% range. It might only be 2 weeks, actually. It's been kind of moving fast around here, if you will. All right, back to the headlines of the day. Here's your Coinbase. We'll see what they're saying about Coinbase here. I believe it was an upgrade. So Tesla got an upgrade, Neo got an upgrade, DraftKings got an upgrade. Heard any of those names? CVS. I don't think I'm in CVS anymore. I was for a while when they got the contracts to put the pharmacy into Target, but it never really paid off, I don't think. Amazon upgrade, downgrade for Activision, Walmart buy, Coinbase overweight. So kept its overweight rating on the crypto company in stronger volumes. And again, have to say, I agree across the board. It's just whether or not people are willing to pay that 2% fee. I say they are now, but as soon as there's another option, they're going to switch in droves. Here's an interesting one. Tesla is an underperform. Yeah. And then you see Tesla predicts, 22% rally over here in the column. So in the right-hand column. So I think really people are like, they have no idea what's going to go on with Tesla, right? We'll see how this story plays out. Okay, let's go back here. All right, downgrading Dollar Tree on inflation, downgrading Darden on labor costs. Labor's been an issue. Everything's local, but well, especially up where we are here in Texas, it's tough to find folks to work in restaurants, and the pay they're commanding now is significantly higher than it has been. So that's kind of interesting too, because once you increase pay, it's hard to really decrease it, right? So it's kind of like an increase forever as far as the business cost. So that's good. It's good for the working folks that are out there. Obviously, that's helpful. Business owners may feel a little bit of a crunch there on labor costs. All right. Caesars is getting a lot of love over Wynn Casinos. So anyhow, I got to make a call on Wynn, even though it did bump up like 10% after earnings. Okay. The Delta variant, you can follow this on mainstream media about the vaccines and everything associated with it, right? It's all everybody's talking about. Now that the Olympics are over, go USA. They won most gold medals, most medals in every category, and most total medals, obviously. Not obviously, but they did. So congrats to Team USA for doing well in the Olympics. Off to Paris in 2024, if you didn't catch that. So pretty cool. That like a 9-ship flyby of the Eiffel Tower, kind of kicking off the end of the Tokyo Olympics and going right into prepping for the Paris Olympics, which is in 3 years, again, since we got slipped a year, but a ton of stuff. If you ever want to read something interesting, read what a city has to go through to prepare for the Olympics. Yeah, it costs a ton of money and they generally don't recoup it. It's generally a negative investment, but we shall see. Okay, Coinbase could jump up to 16% after earnings this week. Let's see if they tell us what day the Coinbase earnings are. Don't want to listen to them. I want to read this Tuesday afternoon. So tomorrow afternoon is when you're going to get that Coinbase guidance. Should be good. Down here at 258 is where it's at right now. A run to 290 or 300 is what they're expecting here. Let's go ahead and actually look at that chart. So transitioning into Coinbase, remember it opened here at 380. I mean, look at that. Everybody who took advantage of the initial price was down money. That was myself as well as several other clients, and we're all flat. We're all out of this completely. So hemorrhaged cash here for a while, eventually ripped the Band-Aid off and just sold it, and it continued down into the 220 range, if you will. Now it's bouncing above 250, and they're saying earnings tomorrow bounces up to 29 to 300. You could trade that if you wanted. I would not hold this as a long-term investment. I really just don't think there's enough to justify that because of the threat of a competitor. I don't know if the competitor is there, but the threat of one is certainly a concern. When you look at valuation, it's actually kind of coming along, right? It's profitable and they're getting more profitable over time. So I'm sure that could get everybody excited. There's really not a real short float against it. So again, there's some positives here, but I just think the real threat is that somebody comes in and does a discount move like discount retailers did in the stock market world back in the day. Discount brokers, what I meant to say there. So, all right, with that, give me a second. We're going to go over to TD Ameritrade and get set up for the open. Good morning, everyone. Welcome to the On Time, On Target play of the day. We have 20 seconds to the market open here. You can see 4 screens on the TD Ameritrade ThinkPipes platform. Got 1-minute charts across the board. On the left-hand screen, this is showing the S&P 500 showing some strength into the open. It was kind of muted earlier, but looking good there. We have one long here in OEG. We have another in VTRS. Here's the opening day. And then our short over here is an HTRX. Let's look at the short first. Again, earnings and revenue miss here. Not super familiar with the company HRTX, and a little bit of a low volume here. So consider, but I do want to zoom in and kind of check that out. Like where it's at, 3 minus 4%, it was down lower here earlier. So we'll watch that. It appears it's not trading yet. Okay, VTRS isn't quite up in our zone either. That's why I said I didn't really like any of these. Just because you don't have the move that we normally like as far as that 5 to 10% range as far as higher there. Okay, so none of these really qualify right now. Let's look at a couple of the crypto proxies. We'll look at Marathon, MARA. up 6%. The reason I don't really like trading these is because a lot of time the move's already been made. So when you have, crypto basically over the weekend, it trades all weekend, right? And trade it whenever. You can have the gain already made and kind of baked into the stock price. So when it opens, there's not that impetus, to go higher like there is when something's coming off of earnings. So even though the numbers are good, they do meet our category, and of course it's power and higher while I'm sitting here talking about it. I don't like it as a normal trade, if you will. Riot Blockchain's another one, up 8% here. Hard to really trade that higher. MSTR, my fave. Let's check it out. Up 5% this morning. All right, and then we'll check out ETHE while we're talking. So the Ethereum, again, this is the Grayscale Trust, is up 7% as well. These things have really been on fire. They really have. Of course, 50% move up in crypto in basically the past couple of weeks, so that's why. All right, not enough volume here in HRTX short. There's another stock that was kind of opened as a short, but kind of flipped around. Now it's a long, and it's WORX. I mean, it's all over the place, so I don't really want to trade this. So here you go. So check this thing out. So we wake up this morning and start looking into the stock, and it's down 5%. So clearly it meets our short criteria. And then it is, since then, it's up 36%. That's insane. That really is. And I'm sure it's stopped out, right? Yeah, it's to stop trading right there on millions of shares. So that's a heck of a weird story from something that was down to not down anymore. I'm pulling up the chart real quick just because I want to see if there's a headline now. We couldn't find a headline earlier, so just kind of want to see if whatever's driving this stock, Squarks, that's an interesting name, SCWORX, software solutions, healthcare space. Not seeing a crushing headline. It's up 135% in 3 months, though. Well, good on you if you're in. I don't think you can hop in here unless you know what the storyline is, and I don't see it anywhere. So anyhow, kind of crazy there. All right, let's see. OEG, can't really trade that. Let's check back to our one short we were looking at, HRTX. No, it's only down 1%, so there's no real way to take that. So that kind of exhausts our Monday morning list of trades. So no trade today. That's not uncommon on a Monday to just not really have anything setting up appropriately, and the market's just basically flat across the board. So still waking up, if you will, as far as the market. All right, let's take a look at some the longer term stuff. MSTR 5%, FireEye up a couple percent. Roblox, name we haven't talked about in a while. Maybe I'll come back and cover where Roblox is, since it's pretty major holding. I would say it's in the top 10 actually in the book. We haven't talked about it in a while, so plan on that this week. You have Pfizer, Palo Alto. Another name is AbbVie. I've been putting folks in. It has a nice 4.5% dividend. I would call that a safe name. It's not a name that's going to score you, 20 to 30% a year, but it's also going to just track right along if things go south with the tax reform, which I do expect the market to get hit a little bit. So a safe name out there. Let's look at the downside. A couple of specs there leading the pack. Win off 3%. So I think we'll be done with Win today. Trade Desk down 3%. I haven't looked at Trade Desk in a while. It was kind of on fire, so it's probably just profit taking. I just had earnings this morning. Actually, it's down 3.5% off of earnings. Let's zoom out to the 180-day chart. So I can't remember when we started into Trade Desk, but it was down here in the 50s range. It's up at 80s now. Kind of stalling out from this nice big move up, but the couple of nice pops here. And then, yeah, selling off. I'm not worried about getting out of the name. I still like their global expansion, but if you were looking to add more, looks like you're getting that opportunity today. Kind of falling like a rock. So maybe generally when you see that, it's on morning earnings. A lot of times the CEOs are still talking when the market opens. And depending on the CEO, a talking CEO can be death to the stock. Zuckerberg was that way. As long as he was talking, the stock was falling. It's like insane. All right. Let's see what else we have. Silver selling off. Alibaba. There's a negative sexual harassment headline out of Alibaba. Not like you needed another negative headline out of Chinese tech names. But they fired the guy and are taking a look at their culture. So at least they're saying the right things. Who knows what's actually going on in the company? But again, another negative for Alibaba. Just hold through it until they right the ship and get it going back higher. Okay. All right, that's all I've got out of that. Let's go back to that chart, and I was just curious of how the Ethereum, dang, almost up 10%, kind of crazy there. All right, back over to the Investopedia. We'll close out with the question of the day, which is a bond ladder. Again, why would you use a bond ladder? Generally, if you're at a point in your life where you're like wanting an annuity, and that's really what I do for folks is I use this, manage money this way. If you give so an annuity situation, say you have $1 million, so it's okay, good, got $1 million. And you hand it over to an insurance firm in the form of annuity, and they'll say, all right, we're going to give you back $3,000 a month for the rest of your life. And you're like, okay, $1 million in, $3,000 a month, that's $36,000 a year. That's a 3.6% yield. But it's guaranteed, right? I don't have to worry about anything. So you say, okay, well, what do they do with your money? They take your money, and at the end of this, you don't get your money back. That's probably my biggest issue, is that's a one-way door, right? You buy an annuity and then get hit by a truck 2 days later. Well, have fun with that. That was the crappiest investment ever. However, if you keep your $1 million and set it up in a bond ladder, then if you get hit by a truck a couple days later, your investment's not affected. The money's not gone. It passes on to whoever you have set up as your beneficiary or your heirs. And the money is still part of you, right? So, well, not part of you because you'd be gone in that case, but the money stays in the family, if you will. So setting up this bond ladder is really what these big insurance companies are doing. And then they also invest on the edge. So if they can set up a bond ladder at 5%, average yield, and they're paying you 3.6%. That's how they can afford to sponsor NFL teams and put skyscrapers downtown, right? Because of that math. So don't do that. Figure out how to do it on your own by listening to me, or pay somebody to do it for you. Not many folks do bond ladders because they're a little time intensive. But when you do it on scale across multiple accounts, then that's what makes it worthwhile of doing. So you buy basically fixed income investments. Doesn't necessarily have to be a bond. You can use bond equivalents, preferred stocks, closed-end funds. We don't talk about stuff a lot because it's fairly advanced, but there are bond equivalents out there that you can also structure into this to where everyone has a different maturity date. When I structure these for folks, coin ripping higher, I see there. Well, let's just put that up on another screen. Coin was up 4% earlier. Yep. Up, it's over 5% now. So yeah, getting some love off that upgrade this morning. But back to the bond ladder. So you set this up, say, take $1 million. I would set up $25,000 bond positions. So, quick math, that's 40 different positions. You could set that up 1 a quarter for maturity. Something matures every 3 months. And then, of course, if you reverse that math, you would set up basically a 10-year bond ladder. That's a little bit long. I tend to set mine up only out to about 8 years or so. So I would either have a few more per year, maybe every 2 months, or just increase the position of the bond size up from 25K up to like 30K or so. So that's how you structure the actual bond ladder. But the idea is you set up the bond ladder, then as bonds mature, you simply buy another long-term bond to go on to the end of it. So it's really pretty slick. And again, interest rates affect bonds, that, but you don't care because you've got an 8-year snake, if you will, of all these different bonds. And guess what? On some years, the interest rates are going to be higher. On some years, they're going to be lower. You don't care because you own bonds of all different maturities. With these bonds, these are not bonds you're looking to sell. As soon as you buy them, it's basically you're entering into the contract. You want the yield off of these bonds, and then you want to get your money back at the end. That's how a bond works. So again, comparing this to an annuity, you pay the money, you make less, and you don't get your money back at the end of it. if you die prematurely. If you enter into a bond ladder, you keep your money, you make more money, and more money stays with you and or your heirs at the end. So it's really, again, profitable for these companies to set up annuities for folks. And then, of course, crush CNBC.com with, marketing to retirees about, hey, don't worry about it. Take the market risk out of your life and buy an annuity, which is a very attractive thing to say to folks. But if they follow the math, they wouldn't do it. So, all right, that's all I've got for you today. Thanks for tuning in. And yeah, Coinbase up at 6% now. So again, we'll keep an eye on that. I don't see it as a long-term investment though, based off all the reasons that I threw out there today. All right, we'll see you guys back tomorrow.